A statement of comprehensive income provides a business with an accurate account of whether it's made a profit or a loss. It does this by looking back at the business's financial performance over the past year. A statement of comprehensive income records the income and expenses of that business for that previous year. If income is greater than expenditure, then the business has made a profit, and if expenditure is greater than income, then the business has made a loss. Let's have a look at how a statement of comprehensive income can be structured and the key sections that go into creating one. Just be aware that this is a basic version and that some courses and exam boards may use a different layout and use different terminology. So please check with your teacher if you're unsure about the layout and the terminology used on your specific course. So the first item on a statement of comprehensive income is sales. Sales revenue is the money coming into a business from selling its goods or services. This is calculated by looking at the quantity sold times the selling price. For example, 1,000 t-shirts sold for £100 each would equal £100,000 in sales. The next part of a statement of comprehensive income is the costs of goods sold. These are the costs directly linked to providing that good or service. This could be the cost of buying the raw materials to make a product or the cost of buying the goods from a wholesaler. As you can see here, we've got a cost of goods sold of £25,000. This leads us to our final figure on the first part of the income statement, which is gross profit. This is the amount of money that's left over after the cost of goods sold are deducted from sales. So in this case, that would be 100,000 minus 25,000, which equals £75,000. But that's only the first part of a statement of comprehensive income, as gross profit is not the final amount of profit that the owners of the business will walk away with. The business needs to calculate expenses it incurred from running the business, things such as rent, business rates, and salaries. These are costs to the business, but an important part of providing a customer with your product or service. In this example, the total amount of expenses the business has is £60,000. The next part of the statement is revenue income. This is income generated from sources other than sales, such as interest received from the bank on positive balances the business has. In this example, the business has £500 of revenue income. The final part of the statement of comprehensive income is net profit before tax. This is calculated as follows: gross profit minus expenses plus revenue income, which in this example is 75,000 minus 60,000 plus 500, meaning that this business's net profit before tax is £15,500. This is the figure that the business will pay tax on. So that's the basic layout of a statement of comprehensive income. So once the business has made this statement of comprehensive income, they can then use it to help them make financial decisions. They can use it to compare their net and gross profit within that year. They can look at their expenses from this statement and see how much that is impacting the net profit that they walk away with. They can also use the statement to compare previous years. They could compare 2020 to 2021. Did they make more profit? Did they make more net profit? Have their expenses increased? Have they decreased? And all in all, the statement can hopefully be used to help the business make better financial decisions for the future.